Today, I want to talk about how the shorts could be planning a hostile takeover of AMC, either for their benefit or for the demise of retail investors. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, I want to start by talking about a company where a hostile takeover is taking place right now, and that company is Disney. Stephanie tweeted about the hostile takeover at Disney that's all but confirmed after the alleged emergency meeting, and has written an article solely about it. So this is the catalyst for the shift is an emergency meeting orchestrated by CEO Bob Iger and billionaire investor Nelson Peltz, steering the ship of Trian Fund Management, which boasts a hefty $8.5 billion. Saying the upcoming meeting, slated for the week after Thanksgiving, is anticipated to be a crucial event. Iger, alongside other key leaders, will address the employees, focusing on the many opportunities the company currently has. And you may have seen, looking at the Disney stock, now is actually the perfect time for a hostile takeover, as the stock is basically at 5-year lows. The lowest point Disney reached in the last 5 years was during March of 2020, around $85. And over the last week or so, Disney has only just started trading above that level. It's fallen significantly from those all-time highs around $200 per share, making it a perfect target for a cheap hostile takeover. But let's focus on AMC and explain why AMC may also be the target for a similar hostile takeover. Jikh tweeted saying revenue for AMC is $5 billion plus for 2023, and debt is currently around $4.7 billion. If a person or a company bought AMC currently priced at $1.4 billion of market cap and then paid off the debt with a 30% discount, the total cost would be around $4.7 billion. You can see AMC's debt is $4.7 billion, with the 30% discount would cost them $3.3 billion to pay down all the debt. Add the $1.4 billion for the company purchase, and it's $4.7 billion total for a company with no debt, tons of revenue, and then tons of profits too. We can see from AMC's third quarter results they generated $12 million of profits but had $93 million of interest expense. Without that interest expense, profit would be $105 million per quarter, or around $400 million of profit per year. That means it'd take, at an absolute maximum, 12 years to pay down their entire investment from a hostile takeover of AMC. Obviously, not factoring in that AMC would generate additional profit as the years go by, likely paying off their investment in 10 years, 8 years, or even less. And especially when you factor in that both box office revenues and AMC's results have improved quarter over quarter over quarter for like the last 2+ years. In 2023, we've already done more at the box office than we did in 2022, and there's still over a month left. So with AMC increasing its revenues next year, the year after that, it'd be a perfect opportunity for someone to swoop in and buy AMC at a massive discount and churn that profit machine. I also wanted to give a massive shout out to Moses, who's absolutely smashing it in the Millionaire Mindset Trading Group. Yesterday he made $160 in just a few minutes, and today again he's made another $177, again in just a few minutes. In just 2 days, he's made enough money to cover more than 9 months of membership to the group, or to buy more AMC shares, or to take a loved one out to dinner, or whatever he wants to use the money for. Today we had SGD, which we knew of because it ran last week as well. We saw it running up past $3 and $4, all the way to highs of $5.12 per share. So if you guys want daily profits like these, be sure to join the Millionaire Mindset Trading Group linked in the description below, which has a 100% guaranteed refund if the educational videos and trade alerts don't help you to make a single profitable trade in 30 days. So as I said, the shorts or a company out there might do that for their own benefit to generate hundreds of millions and billions of dollars, or alternatively might try and do it for retail's demise to kick out retail shareholders. You may say, Tom, how could a company or a hedge fund buy out AMC when retail investors hold 90% of the float? But let's also remember the float is sold multiple times over, so I don't think it would be difficult for a hedge fund to accumulate tons of AMC shares in addition to the float and file that 13F filing. Especially as Adamaran has been selling additional shares, which I've voiced on the channel before that I'm not a huge fan of. And especially when they've accumulated a large enough portion of those additional synthetic shares, they could try and perform that hostile takeover. Especially when you consider, as I said, that AMC's market cap is around $1.4 billion, and companies like Netflix, Amazon, Apollo, and Blackstone all have multiple $billion and multiple times that market cap in spare cash. Dave Murphy added saying, looking at this price decimation and 3+ years of criminal marination, it could end in a leveraged buyout or a hostile takeover. Obviously in this video I've been discussing that hostile takeover, but a leveraged buyout is fairly similar. A leveraged buyout is the acquisition of a company paid for with borrowed money. Maybe it was the shorts plan all along to try and get AMC's price and market capitalization as low as they could possibly get it for a company like Amazon or Netflix to step in and buy them up for literal pennies on the dollar. To note just how ridiculous AMC's current market cap actually is, some companies have a market cap that's many times their revenue multiple, aka they may generate $10 billion per year and their market cap may be $50 billion, with a 5 times revenue multiple. But AMC's market capitalization is currently less than the revenue that AMC generated last quarter alone. So that's not a 4 times, 5 times, or 10 times revenue multiple. That's less than a 0.25 times multiple, which shows at just how much of a deep discount AMC is really trading for, and that AMC absolutely is in that deep value territory. Bar Chart has also tweeted about AMC's stock falling to its lowest closing price in history, which, as I said earlier, is very similar to the Disney chart. So maybe shorts are trying to do the exact same thing with AMC that they're currently doing with Disney. Now in the past, Adamaran has implemented a few different things to sway away from hostile takeovers, like the poison pill. There's also other defences to a hostile takeover, like the Crown Jewel defence, Golden Parachutes, and the Pac-Man defence. Now you may also ask and say, Tom, how are the shorts pushing AMC's price down so much, even lower than it was back in 2020, when especially of all times, AMC is now actually generating profits? Well, as Boss Blunts tweeted, he said today alone there was over $19 billion in AMC options traded. AMC King has specified, saying last week there was only $177,000 in options. Today, over $19 billion in options in just one day, and even attached the screenshot. Boss Blunts added, saying the last time this occurred, around $5 billion was traded in one day back in June of 2021. So in just one day yesterday, we had 4 times the number of options traded than we saw back in June 2021. Possibly the shorts have created additional shorts in those married and divorced puts. Or alternatively, Boss Blunts is saying that market makers could possibly be creating synthetic longs in the form of married calls, and that market makers and other institutions are buying call options to protect against shorting losses and to benefit from volatile upward price action. This is either the shorts preparing for the squeeze, buying tons and tons of call options, or alternatively trying to add additional divorced puts to short the stock price down further. We can see from this screenshot there's a mix of call and put options, all with varying prices in the hundreds of millions of dollars and the billions of dollars, so it's hard to figure out exactly which way they're hedging. We know the shorts have been using these married and divorced puts to reset their FTDs and to create additional synthetics, pushing their price down further over the last 3 years. And it seems yesterday they're either trying to desperately push it down lower or maybe preparing for some volatile upward price movements. Now, IC Assistance has also tweeted about the new lawsuit that Elon Musk has just started against a bunch of media companies. Elon tweeted a screenshot saying fraud has both civil and criminal penalties. It says Attorney General Paxton was extremely troubled by the allegations that Media Matters, a radical anti-free speech organisation, fraudulently manipulated data on X.com, formerly known as Twitter. An IC assistant added saying he hopes this winds up making its way back to Charles Gasparino and every other mainstream media basher bashing stocks for payment. He says to leave it to Elon Musk to set a precedent, and then it's up to the individual company CEOs to follow suit and to create and start their own lawsuits. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.